Absolutely, Harry. Thank you for having me. A little bit about myself. I've been with State Farm just 21 years now. I spent 5 years starting off as a brand new agent when I was pretty young. Did that for 5 years. I was asked to go into a leadership role in the middle of a big restructuring in the mid 90s, and I spent 11 years in that. That was very good to me. And then I decided I didn't want to get into the relocation situation, so I enjoy very much in what I do. Mm-mm.
Yep, sorry about that. You couldn't hear me. Before we get rolling, Kurt, I was just wondering if you could take a few moments and kind of frame our discussion by sharing with us the process that you go through when you think about managing the risk in the area of automobile insurance.
Absolutely. There's a lot of elements that come in the role of auto insurance in terms of the different coverages, the different limits. And as long as auto insurance has been around, there's still quite a bit of confusion among many consumers, as to what they have. We'll get people call in wanting quote that they have is not half the time or more is not exactly what they really do have. And what it usually results in is they have less than they believe they have or they tell us they have. So the biggest thing that we want to try to do is educate our clients as to how the different coverages work, where the biggest hot spots are. And our kind of funny in our office is, we don't want you to have an epiphany at claim time, because claim time's too late. And hopefully we all don't end up in that place. But if it's going to happen, we want no surprises. So what we usually do is get some background on our client, their family situation, what kind of work they do, just general income level, where they are in terms as to protect in terms of success and assets. The higher the liability limits that we generally need to have. So what we try to do is ask them some questions, get an idea of their level of understanding so we can gauge our education and explanation to them accordingly to try to have a compatible conversation and kind of go from there. And then usually what we'll do is see where their concerns are, see how people feel about taking a little higher risk on the deductibles, where those apply, and then start configuring some specific details for their situation. And then from there we can look to raise things, add things, delete things, etc., and find something that fits the budget and go from there. So that's generally what we try to do to match.
Start to move through some of the processes on this, or I should say issues. On this slide, I've kind of pulled together a table of contents for the automobile insurance, from that idea first of how does the loss sharing work to the different parts of the ISO policy, coverages and exclusions, provisions and endorsements, and finally the taxation of benefits. So that's where we'll be looking this evening, or we'll be taking a look at as we proceed through the next set of slides. So let me hand this back over to you, Kurt. We're talking about loss sharing, the deductibles, how they apply, and also the caps, different state minimums, state to state.
I'm here in California. We've had the same minimum liability requirements, statutory requirements of 15,000 per person, 30,000 per accident for bodily injury, and 5,000 for property damage. And those numbers apply to where your slide says caps 250, 500, 100. We've had that for well over 20 years. I don't know the exact time that came in, but the entire 21 years I've been involved in this, that's what it's been. You could say, Jesus, it isn't much, and that's true. If the state raises that, then you obviously, those that stay in the program have more coverage to take care of what their liabilities are, which is a good thing. At the same time, you've got more people that say, I can't afford to have it because the rates are a little higher for more coverage, and they drop out and in our state break the law by not being insured. And I mean, that's just a reality of life that we all have to deal with. So that's what it is in California. And of course, the majority of what I will speak to is what what our requirements, regulations, and rules are here in California, and it definitely does vary, state to state. Back on the top in terms of those are coverages that apply to your vehicle, your property, and so regardless of how your vehicle is damaged, from wind, from vandalism, from theft, whatever it might be, those types of claim situations will always have a deductible. And in general, the higher the deductible, the better it tends to be. The higher the deductible, the lower the rates, of course. And we try to let's think about devastation, versus aggravation. And when we all step back and think about insurance and really what is the mechanism or what is it designed to do for our society, level of comfort of what kind of deductible they'd like to have. I mean, some people going from 250 up to 500, that's a big deal for some people. Some people don't blink at 1,000. And if you don't blink at 1,000, I'd recommend 1,000 and use some of that premium savings that can help take care of an umbrella policy, which we'll get into in a little bit as well. So that's a little bit about a little thought process, and have changed over the years to where driving record makes a lot larger impact on the rates that we all pay than it did, 25 years ago, 30 years ago when I started driving. And what that ultimately means is a higher collision deductible will allow a smaller claim to not necessarily hurt you on your driving record. When you're 51% or more at fault is not a chargeable claim, and therefore it's not rateable on your driving record and in the premium that you pay. So by having a higher deductible, it allows you to have a little bit more damage in a smaller claim. That's kind of the main things on deductibles.
Okay. When we move into the area of settling losses, and we see that liability, medical, uninsured motorist, and collision and other. And on this slide, what I wanted to share with everybody or just emphasize is that you see that the liability is subject to the per person and per accident to share in the area of defense costs, just how important that is to have.
That is the most underrated and undervalued part of really, in my opinion, any insurance policy as it pertains to automobile insurance. We're talking about right now the liability umbrella. We'll talk about shortly. I know last week or week before you talked a little bit about home insurance, and anytime one of the provisions and conditions of these policy contracts is counsel to defend you and protect your interests if you're sued due to negligent event that you're liable for. So that could, in a kind of a messy claim that goes on a couple of years, that could be a whole bunch of money that is automatically provided as part of the claim process that has nothing to do with the actual liability dollars paid to the injured third party. So yeah, I can't stress that enough. The defense costs are a huge thing, and most people don't really think about it and aren't really even aware of it. So very important.
Kurt, in this economy, is uninsured motorist insurance even more?
Without a doubt. We, here in California, we've, been hit up there with, in terms of severity, with so many issues, not more than some company went under. And when push came to shove, they did not have enough money in their budget to pay for insurance. And so we had some situations where people that I never really thought would be in that situation, they went without coverage for 3 weeks, for maybe 3 months, until we could get them reinstated. And so it's without a doubt. I mean, there's different statistics out there, but everybody would agree certainly that there are more uninsured motorists driving today because of the economy than 4 or 5 years ago. And so while uninsured motorist coverage is always important, having it now is even more important, because statistically you have a greater, do you want to take care of yourself and have a backup plan for the lack of liability coverage that individual had.
Since subrogation is one of the core concepts of insurance, when the other person does not have any assets or insurance, and State Farm, for example, gives us that money that would have been paid, how does State Farm try to go after and get reimbursed for that?
State Farm, they'll investigate the other individuals, the at-fault parties situation, and $10 an hour, they're barely making ends meet. And so, I mean, we can go after them and try to attach, a wage settlement, which we can do here in California for up to 10 years. But in a lot of things, when there's nothing there, there's nothing to get. And so, we try to obviously pick our opportunities and go for the recovery that we believe we're owed. That's fair and reasonable. But we've definitely found there's more cases these days where there's we'll make an attempt and find there's not a whole lot there, and frequently that's kind of the end of the road.
Yaya asked a really important question in about insurance, underinsured motorist endorsement, I guess, when he says if they have coverage but not enough, how would that work? Would you respond to that? What you do in that situation?
Absolutely. In our coverages here in California, you're uninsured the damage that they did, and there's no other fairly quick, reasonable way for them to pay. Then what we can do is open up a claim with State Farm on your uninsured motorist coverage to take care of the underinsured part of the claim subject to your policy limits.
Yeah, and that brings up another good point that we always need to be looking at contracts because they're not all the same. Similar to like what you heard from John last week, that while property might typically be 50% of the home coverage, his company State Farm, I think it was 75.
Yeah, and it's interesting when one of the things that we get a lot at State Farm, being the largest auto and home insurer in America by quite a bit, we get a lot of movement. And actually, Harry, you're one of those folks. Just didn't even think about it till just now. But you had State Farm, out of state and in California, and we frequently will see, the different coverages that come from the out of state. Some of them we're not real familiar with because those provisions don't apply here. And sometimes we see uninsured motorist coverage and then a separate line item for underinsured motorist coverage, a separate charge. In California, it's one and the same. And actually,
okay. The last item that
one of the things that we see a lot is someone will say, somebody hit my car. We'll say, okay, who hit your car? And they say, I don't know. I was in the store. I came out. It was damaged. They didn't leave a note. And so a lot of people then will default and say, so I can make an uninsured motorist claim. And so the next question comes back is, if you don't know who hit your car, how do you know if they're insured or if they're uninsured? Now, of course, the natural assumption is if they hit it to be counted on their driving record for an at-fault accident and what that means here in our state in California. But in California, for uninsured motorist coverage to apply, we have to investigate the claim and prove the person responsible on that moment of time, that day and time of that occurrence, that they were in fact uninsured. If we don't know who did it, we don't know anything about it. And unfortunately, in that case, you would have to pay your deductible on your collision coverage. We would then repair your vehicle. And in our state here in California, that does not impact your rates because there's no negligence of driving on your part. So we get that quite a bit. So I thought I would throw that in.
And would you respond to that last item about, you just said you have a collision and you're going to repair the damage less the deductible. Would you respond to that, lower the actual cost of the replacement value of the repairs?
Oh yeah, replacement $3,000. Then we're going to pay $2,500, and then the insured would pay the $500 deductible.
When would an insurance company say that the car has been totaled?
Normally, our general rule of thumb is when the first estimate gets up to 80% of the value of the car, we will almost always total it. And the reason for that is estimate, but then once the car goes up on the rack and it starts to be torn down, there's always going to be some sort of additional damage that you cannot find, called supplemental damage, until the car starts up to 6,500. And so normally, so that 80% buffer is kind of why that rule of thumb is there. So we use at State Farm that vehicle is actually selling for. So we don't look at, what people are listing a car for, because you can ask anything you want for a car. That doesn't mean that's what the market will bear and that's a fair value. And we will look at that down to the exact equipment, whether, you have an aftermarket, DVD player or whatever it would be. We'll account for every item.
Renee wrote for you regarding leases.
Yes, on leases. Pretty standard. This has been around for a good while. When you lease a vehicle, basically renting a vehicle, the leasing companies have traditionally asked for limits, at least here in California, of 100, 300, and usually at least 50 on the property damage, sometime 100. While they find that the limits, are not adequate to pay for the damage, and the leasing company, doesn't want to have any involvement whatsoever. So that's been standard. I think, gosh, when I leased my first car back in 1993.
We're going to take a look at the ISO personal automobile policy, and here are the different parts. Would you like to take this slide? And on the following slides, we kind of go into the details of that. So go ahead, Kurt.
Yeah, so Part A, liability, that's obviously the standard, statutory requirement that's going to be in probably every state, I'm sure. Again, like I mentioned earlier, in California, as you see those limits on the slide of 250, 500, 100, in California, those minimum requirements are 15, 30, and 5. Now, what do these numbers mean? Looking at your slide, the 250 is 250,000 per person in the other car. The 500,000 is total per accident for all the people in the other car, for bodily injury and permanent damages. So when I sit with clients every day, I break that down into real terms. If I'm driving and I run a red light and I hit Harry, and I don't know Harry, my policy would pay up to $250,000 per person. So if Harry's alone in his car, my policy would pay the damages up to $250,000 for all of his medical, doctors, hospitals, et cetera. And if my damage to Harry was such that now, Harry physically can't carry the Christmas tree and inside set it up anymore. He can't get up on his ladder and trim the bushes in his yard, do basic things that a lot of us do that we kind of take for granted. But because of my negligence, Dr. A, B, and C say, Harry, we love you, but you're just not going to be what you were. This is as good as you could be. Our society, the way we try to make that right when we can't unring the bell is with a permanent injury settlement. And so that 250 would take care of all the immediate doctors, hospitals, lost wages, and permanent damages. If Harry has family in the car, it would pay up to $250 for any one person in the car, and it would pay not more than $500,000 total collectively for all the people in the car, 3 people, 5 people, whatever it would be. So those first two numbers, again, are bodily injury liability limits. And then the third number listed there, the 100, is property damage liability. So that would take care of what the damage I did to Harry's car. If Harry drives a really nice Jaguar or a BMW and he doesn't, so if he tells you the car in front of them and pushes that car into a third vehicle, and of course in that case you're at fault and you're liable for the damage to both vehicles, as well as if you take out a light pole, you run into a building, you run into a restaurant, a house, things like that. You see it on the news. Those kinds of things are all going to be part of the property damage. So again, first two numbers are people, the third number is property. Okay, medical payments coverage. Not every state has this. Some states have what they call personal injury protection. That is fairly common, and that's usually found in no-fault states. Legislatively, we tried to get California to be a no-fault state to try to minimize litigation. But of course, our friends at the trial lawyer group, got out in front of that one. But what medical payments coverage is designed to do is protect you and the people in your car, and it can help you if it's your fault or if it's not your fault. So let's go back to the thing again where I run the stop sign and I hit Harry, and I'm at fault clearly. If I have my son in the car with me, the medical payments coverage I have on my policy will take care of my injuries and my son's injuries. Now, a very, very common limit that people buy is $5,000 of coverage. And where that number has traditionally come from over the years, it's designed to help offset deductibles and copays in one's health insurance plan. Now, several years back, we were starting to see more people go with HMOs and $10 copays and things of that sort. And so that would kick in a lot sooner, and people would not have the financial out of pocket that they, versus the traditional plans. What we found with the economy, the economic downturn, we have found a lot more people by far are back to the traditional 80/20, 90/10 type plans in group medical through their employer. And we're finding $1,000, $2,000, $2,500 deductibles all day where we used to find 500. So what that means is, and like in my case, I'm a self-employed individual, I have a $5,000 high deductible plan, and there's some other tax advantages to that. But with that, I'm out of pocket, $5,000. So if I hit Harry and I get a broken arm and I get dinged up and it's a couple $1,000s, then my State Farm MedPay coverage will reimburse me rather quickly for those fair and reasonable out-of-pocket charges for up to a 3-year period for treatment from that covered accident. Our medical payments coverage, this is a great point. So many people miss this one, but not every company offers this. It's pretty common though, but at State Farm, our MedPay will extend to you as a pedestrian, which would include you riding your bicycle. So if you're out on a Saturday afternoon, you're riding your bicycle, somebody turns into a shopping center, doesn't see you, and they hit you, and you clearly have some injuries, you would then be able to use your State Farm MedPay coverage in your auto policy up to those limits to pay for some of those expenses. Obviously, the party that hit you would be at fault and liable. But one of the challenges is liability coverage will pay usually one time at the end of the claim. So when is the end of the claim? Well, we don't know. The end of the claim could easily be 6 months, 9 months. If you're treating for your injuries, we don't know day one, are you going to be better in 30 days, 90 days? It's really hard to say. So when you go get medical care, the medical provider will want to be paid somewhat timely, far earlier than a liability settlement would ever come into pay in most cases. So you could use your State Farm medical payments coverage to pay those folks to kind of take care of them and move on, and we can settle up the other details later. So it can be a very, very handy coverage. I would say, I know we got a couple questions here. I would say probably 75-80% of our clients carry MedPay, and more are adding it that did not have it because of the increase in higher deductible plans these days, where employers are doing it to save money in terms of that. So let me take a look here. We got some other coverages. Maybe I can touch base, Harry, on a couple of these in a couple more slides.
Yeah, Michael wanted to know if liability coverage, that back to our Part A, is that the same for the rental car while your car is in the shop?
Absolutely, absolutely. When your car goes into the shop for repairs, the rental car that you have to get around until you get your car back, and 2 weeks is very, very common amount of time. Yes, your State Farm policy and standard in the industry will extend to that. And while we're talking about rental cars, we get this all the time. Hey, I'm going to be going on vacation to Texas, and I'm going to rent a car for a week. Do I need to buy the rental coverage from Hertz or Avis or what have you? And with State Farm, the answer is no, you do not. We provide, without getting into all the finite details, but we provide an ample amount of rental days, consecutive rental days of coverage, that for the typical person that goes on vacation for 1 week or maybe 10 days or 2 weeks, when you rent that car, if you have something happen in that car, whether it be wind damage or an at-fault accident or whatever, your State Farm coverage will extend to that car as if it was your own.
Megan wants to know if this Part B, medical payments coverage, is that popular? Is that a popular coverage, and is it popular for people to jump this up to, like you said, $5,000, so that you don't get into the copay issues with your health insurance and that sort of thing?
Yes, it's very popular. As I was mentioning earlier, I would say in my specific case, probably 75% of our clients carry it. So in that sense, yeah, it's pretty popular. It's a pretty small line item. I mean, rates vary so much by many, many factors, from market to market, area to area, state to state. But I mean, in my area, where an average 6-month auto insurance term premium is about $400, maybe the high 300s. Your typical 6-month policy term cost for medical payments coverage is going to run you anywhere between maybe $15 to $25. So it's not a big ticket item, but the day you need it, all of a sudden you need $1,500 or $3,200 to take care of some things, and maybe your budget's tight because you've been impacted by the economy. It can really, really help you.
Yeah, that sounds like a great cost benefit. Renee asked about emergency roadside assistance, and I'm not sure if that is a rider or if in some policies it's actually an additional benefit. So would you respond to that?
Absolutely. We have an option, a reimbursable option of emergency road service. It's $2, $2.50 every 6 months. I mean, it costs nothing. And our benefit, it's an optional coverage. It doesn't come automatic. Probably, I'd say half the people carry it at least, so it's reasonably popular. And our coverage is designed to tow you to the nearest place where repairs could be made during normal business hours. So it's not designed to tow you 70 miles across town because that's where your favorite mechanic is. It's a couple of bucks to take care of that. It also can reimburse your typical $50 charge if you lock your keys in the car and you have to pay somebody to come out and open the car up, as well as if you run out of gas. We don't obviously pay for the gas, but we pay for the $50 charge for the service to bring it out to you. And we at State Farm, we can reimburse those. As your agent, I can take care of those. You could drop in my office or mail those in, and we could cut you a check right on the spot.
Now, we already spoke about Part C. I'm not sure if there's anything else you wanted to add to this, or if there's any questions on Part C from the class.
While any questions may be developed, let me make one more comment. And I don't know why historically going back 20, 25 years, this is very, very common. But we still see when we're referred somebody and we look at the coverage they have with our competitor, half the time probably we find that their uninsured motorist limits are lower than their liability. Now, if they're significantly lower, most states have a waiver form that has to be signed if they're not at least at a certain level. But one of the things that we always bring to our clients' attention, and I've never had anybody give me a good answer to this, if you have limits of 100, 300, meaning if you're willing to protect an injured third party that you hit, a stranger, someone you don't know, you hit them, if you're willing to carry coverage high enough to protect your assets and pay up to $100,000 for them, why wouldn't you in turn have at least $100,000 on your uninsured motorist coverage to protect you if a stranger hit you? And what we find a lot, common patterns are 100, 300 on the liability and 30,000, 60,000 on the uninsured motorist. And I will look right at their declaration page with the competitor and I will ask them, hey, Harry, let me ask you a question. I'll explain what I just explained to you folks, and I'll ask, why do you love a stranger 3 times more than you love yourself? And they'll usually stop and kind of think for a minute and say, geez, nobody's ever asked me that. And I say, so you hit somebody, your policy will pay up to 100 for them. If that somebody hits you, they're at fault and they have no insurance. Now your backup plan for that is you're only protecting you for 30. And so we always recommend carrying the same level of uninsured motorists as you do liability. And in California, you're not allowed to carry more, but you can carry the same. So if 100, 300 might be the right fit on the liability, we always recommend 100, 300 on the UM, and the vast majority of the people we work with will take it. It's peanuts to bump it up.
We had another question here from Lorenzo. He went back to the, can you endorse the mileage in that towing if you know that you have a type of car that most likely you're going to have to tow a long way? Is that possible?
With State Farm, no. We find a lot of people will have some of the additional emergency roadside service through like the auto club, motor club benefits and things like that. Our coverage is designed to be a little bit more fundamental and simple. We try to keep the cost down and keep the benefits relatively in check. For those few people that might need to tow it to 50 miles or something like that, we don't get the request very often in my experience, but in our case, the answer would be no. I can't really speak to that, elsewhere in the industry. I don't know.
Okay, good. And then Part D.
Part D. Part D is going to be the physical damage coverage on the vehicle. Collision kind of speaks for itself. Collision with another vehicle or object, overturned vehicle. You're driving along the road, you lose control due to bad weather, and you take it down in the ditch. Single car accident, unfortunately, that's going to be a chargeable accident on your driving record because, of course, the Motor Vehicle Code says you need to keep your vehicle operated in a safe manner and based on weather conditions, drive slow and all that type of thing. So that would be a collision claim. You back into a pole, you back into a parked car, you hit another vehicle. All those things are such that your vehicle is damaged in a collision, and you would pay your deductible. And we find out in our area here, 500 is probably the most common deductible. Probably 1,000. That's how that would work. And then other than collision is comprehensive, comp for short. That's kind of a laundry list or a menu of items that would cover that, hence the name comprehensive. The more common ones that we see are going to be, fire, theft, wind, vandalism, glass breakage. Out here, earthquake coverage would be a comp loss. Hail, we don't really get hail out here. A lot of you folks in other parts of the country would get hail. Actually, if you hit a deer, we don't really have the problem locally here. But if you're driving and you hit a deer, even though you've collided with another object, a deer or an animal being a moving object that you're not typically going to see on the road as another vehicle, that's going to be covered under a comprehensive claim. And in California, not chargeable on your driving record if you hit a deer. All comp claims do not impact your rates. So that is, and again, it's the actual value to repair the vehicle. And again, like we spoke earlier, usually when you get upwards of about 80%, we're gonna do a total. Some people like it as a total, believe it or not, and some people don't. They like their 12-year-old car. Kind of like that comfortable pair of shoes that's broken in.
Renee, I'm going to come back to your question when we get into those vehicles that are not covered under the standard PAP. Lorenzo wrote a question, and perhaps you would have some comment to that.
Let's see. Please share an example of damage to the vehicle that does not fall under collision or other than collision. Wow, that's a good one. Lorenzo, that's a great question. I've never seen a situation where the vehicle has been damaged. It would have to fall in either of those categories to be, covered by the insurance. Obviously, any kind of vehicle maintenance, mechanical failure, things like that, are, damage under the hood. Those are things that, we all have to repair as just owning a car and things break down. But wow, I can't speak to that one. The common ones I mentioned earlier are what we see kind of day in and day out, and from once in a while we'll see something kind of out there. But those are the common ones. I'll have to think about that one. If something resonates with me before we're done, I'll bring it up. But I can't speak to that one. That's a good one.
Okay, so Part E and Part F. If you have anything to say on this, Kurt.
Not really. I mean, the standard things, duty after loss. I mean, you need to inform us right away. I mean, the sooner the better. Like anything, the condition of the vehicle and, witnesses and your account of what happened. It's going to be the freshest kind of right now, not, hey, what happened back in November, that kind of thing. So you need to inform us, right away as soon as is reasonably possible, which, most people will call us within that day or the next day. If it's a weekend, we have our 24-hour service at State Farm that can take your claim on Saturday night or 2 in the morning. But that's that. Authorize us to subpoena any records that our claims department might need to get. And, we at my agent level are, usually not part or privy to any of that kind of thing. Submit proof of loss, any reasonable documentation to substantiate, your claim. In the case of the auto policy, normally in this day and age, for convenience, 24/7 and all that, we at State Farm and most companies have a network of body shops that we have contracts with. You can repair your vehicle anywhere you want. We don't say you have to go to shop A, B, or C, or you have to go get 3 estimates. I mean, that's real old news. If you want to use a shop in our network, and there's plenty of them around, we don't have to see the car first. So when it comes down to submitting proof of loss, the body shop will take photos and we can electronically view those, our claim reps, through the electronic claim file. So that would be the substantiation, of proof of loss that way. If it's, some kind of equipment that was on the car that was stolen, therefore it's not around anymore, some kind of photograph or a receipt as to where you bought it, something like that would substantiate. And then cooperate, is kind of a no-brainer. You need to call, return calls, provide info in a timely manner. That's probably the biggest thing where these claims take sometimes a little longer than they need to be, is how long it takes people to call back and just respond and get this done. I mean, we're all busy, but a lot of that is in our insured's hands. The length to adjust the claim has a great deal to do with how quickly they get, the reasonable information that would be required in the situation.
And let me see, I guess we'll just move through here unless there's anything that you wanted to add. These are standard policy provisions. And this is consistent over the term. We've been talking about the different provisions that you would see in a contract. So, okay, so we'll move on. Now, another thing that I've tried to do over the weeks, and everyone knows, is we're saying, okay, with our insurance, who's covered, what is covered, and where is it covered? And so on this slide, we're saying who's the covered driver. So by definition, we're talking about the insured, the spouse of the insured, family members living with the insured, others who have been given permission to drive the vehicle. And then would you say anything else? Is there anything else, Kurt, that you would come to mind?
No, I mean, I guess the main issue that would come into play that we find, I mean, our policy at State Farm is very inclusive by nature. Things happen 24/7, 365. So we try to be very, very inclusive in how we go about protecting people. Like Harry said, it's going to protect, the named insured, spouse, family members. The hot spot we get into once in a while is we'll have a new driver, a 16, 17-year-old, they go get their license, and they, we run into cases once in a while. It's pretty rare, but they're driving 8, 9 months. Rating mechanisms, though, if we find out about a driver like that, and they've been driving 9 months, they haven't paid the premium, and then they have an accident, a family member like that, I mean, we'll pay the claim, but now they're going to be rated on the policy, and because of the driving record, they're going to come in at a higher rate than they would have been, as a brand new driver. When they come in as a brand new driver, they get their license yesterday, and we add them on today. In California, they'll get the benefit as if they had been a 6-year clean driver, which means lower rates and then slower increases for things that hit the driving record. If they don't report that, timely, we get into those other issues, and sometimes the people who don't report them, they don't report them because, they're afraid of the high premiums of a brand new inexperienced driver, which, I mean, I understand that, but if you don't like that rate, wait till you see the higher rate when you didn't report them and they've had a wreck and now where we're going to be. So, and the other big thing is the permissive use. We had some carriers out here in California, and not so much till 3 or 4 years ago, but they would provide limitations of permissive use, which would mean if you have a brother from out of state that comes in for Christmas and they borrow your vehicle to go shopping or go to the beach or go somewhere, they do it with permission, that's fine. But the level of liability limits extended to them because they're not an underwritten member of the family and added onto the policy, they're an unknown driver to the company, then limits would reduce down to state threshold. We don't do that. We've never done that. And so if you have a family member or somebody in a rare case that has to borrow your car, they borrow your truck, to go pick up the television or something like that, you're a good neighbor, as we say at State Farm, and you offer, your vehicle to them. Those full benefits, would extend from your policy should something happen and you find yourself in the middle of a mess. How are we doing on questions?
Good. We'll come back to a couple of those in just a moment because I want to go back to Renee's question
Okay.
because she got into what's not covered. But what vehicles are covered, which ones are not?
Good slide right there. I mean, the standard auto policy is gonna provide coverage for private passenger cars, trucks, vans. You know, your everyday vehicles that you'll see on the street. We have a separate, it's slightly different, but a recreational vehicle policy. Um, Replacement vehicle while the vehicle is being repaired, you get the automatic extended coverage to that car that you rent from Hertz during that time. Utility trailers, you would need to get a separate when it's parked, you know, in your driveway, the side of your house or what have you. When it's hooked up to the back of your vehicle and you're using it driving down the road somewhere, if you swerve, you know, to avoid something, and the trailer swerves and strikes the car in the lane next to you, your liability coverage is going to take care of the damage to the other car that you hit. But the trailer policy is what will take care of the damage that may have been done to the trailer in a case like that. Um, what vehicles are not covered? Um, you are not required to carry the legal insurance for a car that's not licensed for public road use. So if it doesn't have a license plate on it, you use it to maintain your property and things like that. You are not required by regulations to carry insurance on that. Some people will. You know, if you go motorcycle riding, you off in the dirt. You know, if you run into, you know, there's a bunch of you riding together, you run into somebody, your liability coverage on that, you know, would protect that. Very good idea to have it. Those are dangerous things to do. Of course, some insurance may be on the motorcycle itself, because if you total the motorcycle while you're riding it because you crash, unless you're deductible, you know, you'd get provided coverage there. But if it's not, again, no license plate and it's not licensed for road use out on the public highway, you're not required to carry liability insurance for that.
So I'd like to back up to Renee's question because we know that a motorcycle is not going to be covered under the standard ISO PAP. And Renee had asked, what about motorcycles? Do you recommend higher or lower coverage for those, since the person is more exposed and would probably be injured?
Can do
would their
a
own
lot of
medical
damage.
coverage do it, or should they have higher motoring coverage? This is part B, and just the whole insuring of someone who rides a
You know,
motorcycle.
we generally recommend carrying the same high level of limits and benefits. We find a lot of our clients in the area where I work with people primarily, it tends to be a little bit more affluent area, and therefore, you know, we have a lot of people that have a Harley to ride on the weekend on a nice day and that kind of thing. Obviously, it's a nice bike. It's an expensive bike, so they're going to have coverage for that. But that's also a very big, heavy bike if they were to be at fault and hit somebody. One of the big areas that is a tough one is the standard motorcycle policies with State Farm and the big carriers. You MedPay coverage for yourself is not eligible. We don't offer it, which means obviously if there's not a whole lot that has to go wrong while you're riding a motorcycle for one to be injured quite a bit, because you don't have the protection of airbags and, you know, doors and bumpers and things like that that a primary vehicle would have. So riding a motorcycle, you have that inherent risk out there that you don't have a lot of protection. If something happens, if you lose control, you fall, you know, you're going to get skinned up and scraped up pretty good. And that's just part of the high risk of having that.
Jared had asked that if
like
you have an
anything,
accident
honesty's
and you
always the
call
best
in, do you have
policy.
to
I
be
mean, you
careful in the
know,
wording? Is
yeah, we
anything
do
in the
live in a
wording
we do live
would
in an age
affect
where, you know,
your
it's
claim,
always nice
or
if
is
it can be
just
the other
being
guy's
honest
fault
would be
or the other
enough, and
gal's
then
fault
they'd
kind of
sort
thing.
out everything?
But honesty's, you know, the best policy. You know, report what happened. You know, one of the biggest things, we had one last week. We had a client come in and they had a very minor, but it was a parking lot accident. And she and the other party both said at the time, you know, we hit each other kind of 50-50, and the other party told our client that they believed it was, you know, probably half and half kind of thing, and equally responsible for what happened. They were both backing out. When they both started backing out, of course, they believed it was clear, and as they continued backing out, it became not clear. So when she came in and we submitted the claim to State Farm, my team member typed in a very simple synopsis of what happened, but the way he worded the language was something to the effect of, vehicle one started to back out, looked, it was safe to back out, continued to back out, and then hit vehicle two, the other vehicle. Well, then she says, well, that's kind of what happened. That sounds like I hit them. They were there, maybe not moving, and I hit them. Therefore, one could conclude maybe it's my fault. And I happened to hear that and said, no, that's true. That's a good point. So we reconstructed the language to say, vehicle one, attempted to back out. They looked, it was safe to back out. They started to back out. And when they got most of the way out, they heard a crash and realized they had hit the other vehicle that all of a sudden was now there. So that made sense to give a little bit more clarity that it wasn't necessarily our client's fault right off the bat. Now, our claim rep will talk to our client, they'll talk to the other client. I don't know if there are any witnesses. They'll sort all that out in due time. But sometimes, yeah, you want to be diligent, because you can take the same set of circumstances and word it one way, and it can have a different sound than a little bit different verbiage. So that's all I would really, really speak to there.
Okay, and we'll move beyond this slide, but further in the class, you can see where the vehicles are covered.
People going to Europe or something like that, you have to get the coverage over there.
If you're going to be driving somewhere else, I guess you can maybe get some
Mexico
other
being
coverage,
very close to where we are here, we cover up to 50 miles
right?
into Mexico, and then after that, all bets are off.
Yeah. Okay, and finally, what losses are excluded from the coverage, and you can see here that remember the business-related loss, right? So if we have clients with a business, they need to be looking at business insurance.
That's the only thing.
That's
I had a conversation
or in this
today
case,
with
business
somebody,
auto insurance. We'll look at that next week in our classroom.
Personal insurance for your personal everyday situations. Business insurance
of
for business.
Particular interest you would like to mention on this slide?
You're omitting the most important point. Renee says she loves our commercials. That's the biggest part of this whole class. we
Oh, okay, yeah. Okay, good. So, as far as endorsements, any endorsements that you
we'll just circle back around real
consistently
quick to say,
recommend for clients? Are
jinx
there
yourself
items that
on
we
the
should be
liability
talking to
coverage.
our
To give you
planning
an idea,
clients in
in
addition
my area,
to the
the difference
basic
between
coverage?
100, 300, and 250, 500, you might pay $175 or $200, something like that, maybe for 6 months for 100, 300, and you might add to go up to 250, 500, which is essentially about double the protection. You might add from 175 or $200, you might add $30. And so you're penny wise and pound foolish not to do it. Everybody, yes, has boundaries that you have to work with, of course, but don't chintz on the liability coverage. Make sure you protect yourself on the uninsured underinsurance. And I would always recommend going with the highest comp collision deductible that you can, that you have, State Farm or whoever your carrier is, really putting their arm around you, standing behind you for a bigger claim that could potentially come about.
And finally, on taxes, we probably, for those of you who had in tax course already or 502 class, you know that compensatory damages are going to be tax-free. Also, the auto repairs are going to be tax-free. Where you get into the taxable situation is if the judge or a jury or whatever you go through, if they define part of the claim as a reimbursement of lost wages, that's taxable. If there are punitive damages or damages awarded for emotional distress, they are also taxable. So we'll keep that in mind, right? This is where we started tonight's very, very important area. That's liability insurance. Any other final thoughts or recap, Kurt, before we move on?
To lower, my out-of-pocket on the premiums. And while the answer to that is always yes, more times than not, when we say, well, if you drop this down to this next lowest level, you'll save, $28. And more times than not, people say, well, I'm giving up way too much for that little bit. And if you divide that by month and it's $5 a month, people usually don't do it. So the higher limits are very, very cost effective and, just a far, far better buy to protect yourself. So just make sure you're real diligent in your own personal situations, taking a look at that.
And that's a great segue into the next
see,
one,
let
which
me
is the
look up,
umbrella
because we
policies, which
don't
I think are
use,
some of
our
the
State
best
Farm policy doesn't
cost
use those
benefit that
same
you can
letters.
possibly get.
Let's
Before we
see,
move to
B
Carolyn had a
is
quick
med
question.
pay
Can you
and
collect under both
C is
parts
uninsured
B
voters. The
and
answer is
C for one
yes,
accident?
you can. And the med pay coverage, like I mentioned earlier, you have limits of 1,000 or 5,000. That's going to be more of a minor level, related thing where your liability and your coverage are going to be typically the higher level of that. And yes, they can go together.
So now we move into the umbrella. Now, last week, we know that with the homeowner's policy, there is that liability piece there. And this evening, we know that there's the liability,
Absolutely.
associated
in
with
our
the
area
auto
here,
policy.
we
The umbrella
do a
goes over
ton
and
of
above that.
liability
And so I'll
umbrellas.
give
And
you,
as Harry said, they
I'm
are a
going to give you
separate
the
excess
mic for the next
policy.
few slides,
They
and
come in
perhaps you
$1 million
can walk us
increments,
through
1
the
million, 2
liability
million, 3 million.
insurance.
1 and 2 million does the job for so many of the people that we work with. But you have an occasional case where people need 5 million and what have you. And really the purpose is if you were negligent and liable for something real significant, I mean, the first 2 stories on the 6 o'clock news, that kind of thing, where you see a real horrible accident on television, on the freeway or wherever, that is what you think about, unfortunately, with a liability umbrella. None of us plan on them happening. That's why we call them accidents, because they're not on our calendar for next Tuesday at 10. But policy limits are maxed out. This is the policy limit. So that's the main framework for starters. Yes, individual or commercial, we do a ton of the individual ones. There are cases where we have clients that have over 4 rental dwellings where they have homes they rent out, investment properties, that kind of thing. We can endorse up to 4 rentals on the personal policy for an extra charge. Beyond that, you get to be kind of a big hitter in that. Again, an umbrella really does 2 primary things. It pays up to the liability limit, like 1 million or 2 million in damages to the injured third party. That's what we generally think of. But the sleeper benefit is the defense costs provided when you're sued for $400,000 or $800,000, for example. We at State Farm, as part of the conditions of the policy, we will defend your interests and we will provide you counsel, throughout the claim process up until a settlement is made and or we reach policy limits. An umbrella claim, I mean, not unusual. It could go a couple years with all the legal back and forth and what have you. And so there could be a significant chunk of change in defense costs alone that are automatically provided by this policy. So those are the main items right there. Like the next slide, stacks on top of your underlying homeowner policy and automobile policy. Standard in the industry these days, you need to carry what the auto slide said a while back, 250, 500, 100 liability limits in the auto. A renter's insurance or a condo only requires the $100,000 of liability coverage that comes with the policy automatically. Some companies require 300,000, and in that case, you'd have $1 million on top of that for $1.3 million if you had a swimming pool accident or something at the golf course, or something like that. One of, let me just kind of continue here, I guess. The minimum underlying coverage I talked about, premium costs are generally quite reasonable. In our area, we have, 2 adult drivers. Take Harry, Harry and his wife, they have the cars in the homes with State Farm. In our area, $215 for $1 million umbrella. If you're like further out into LA, Los Angeles, more claims, more traffic, etc., maybe you're looking at, 250 to 275, something like that. And then the cost would go up from there a little bit. If you have a third driver, like a high school driver or something like that, then, you're probably looking at, $450 or something like that to have 3 drivers covered, one being a brand new driver with, much higher risk. So coverage for the money, bar none. Nobody ever talks about the $450 of premium, when their teenage driver of 1 year significantly injures somebody and they have all that protection from State Farm in litigation. Nobody looks at the $450 they paid for the policy. Premiums don't matter at claim time ever. I just lost my thought. I had something I was gonna speak to. Harry, I can't hear you.
let me jump in for a second because I wanted to share a story that you and I talked
Harry, I still
about,
can't hear you.
and this. Oh, you can't hear me? Can everyone hear me? You'll be able to hear me in a
Still can't hear
second. You'll
you. I
come
could
right
hear you in
back
the other
on in a
room. That's how
second.
I know you're
Okay.
talking.
Yeah. Um, okay. Hold on. Do you hear me yet?
Okay.
Okay. Hold on for a second. I'm going to open the door because you'll come back. It just takes a few moments. You'll come back online in a second.
Not through the mic. I can't. No.
So while he's coming back online, let me share a story with you. And okay, you can hear me now, Kurt? I think I can hear you.
Okay.
Oh,
Let's see. I was noticing a question a minute ago about a DUI. Yes, and believe it or not, even though it is illegal to drink and drive, if you are intoxicated over the limit and you hit somebody, that would be a covered claim. I personally didn't have one of those, but 5 years ago, when I came back out of my sales management role with State Farm to being an agent for the second time, and I took a book of business to lateral myself out for a retired agent, one of the clients I met in the first year was a guy who had actually, believe it or not, he had gone to prison for a short time, and he had a liability umbrella that we paid policy limits because unfortunately he killed a father of four on the freeway. And, another one of those cases where we never expect them to happen. But the umbrellas are either all or nothing. Either, you never need them, or when you need them, it's big time. Yes, I can. You're back, Harry. Yes.
Kurt, can you hear me now? Back. Okay. There was a story that I wanted to share. You and I have talked about, and I want to share very quickly with the class because it relates to this slide. And I was down at the National Convention in San Diego a couple years ago, and a gentleman from Chubb was talking about the of how an umbrella may have broader coverage than the underlying insurance. And this could cause an unexpected deductible or self-retention cost to the policyholder. And his story was such that someone had, I think it was Lindsay Lohan or someone of high profile who maintained a blog or a Twitter or something, and this person had slandered that person for what they had said or what they did, and there was an ensuing lawsuit. The umbrella covered the slander, but the underlying policy did not, which meant that the person who was sued had to come up with money out of pocket to cover the cost until the umbrella kicked in. Would you be able to respond to the idea, or Kirk, would you be
Absolutely.
able to talk about the idea of
It's an
perhaps
item
an
that
underlying
has not,
policy not being broad enough or
from
not
what I've
covering
seen,
some
not reared its
piece
ugly head
that the
yet, but
umbrella might, and then you may have
in
to
due
have an
time.
endorsement to pick up that piece of the puzzle?
Play would be the liability umbrella policy standard will give you coverage for libel, for slander, wrongful eviction. Um, now, but that is not something, believe it or not, that's standard in your home insurance liability. So if you don't have the $10 endorsement on your home policy, Harry, then the $100,000 coverage would be basically deductible, as you were speaking to a little bit ago. And I think an area where that is, make comments and nice or not about somebody else or whatever the case might be, if you run into a situation where somebody reads what you said and believes that's slanderous comments to their reputation and you've damaged them and things like that, then I would imagine in the future we're likely to see more claims of that nature as it speaks to the underlying coverage and the liability umbrella. Other than that, the predominant areas where we see umbrella claims are car accidents by far. Once in a while, you'll see maybe a bad fall at someone's home. You'll see a swimming pool accident. I coach Little League Baseball, so I'm around kids all the time that have a bat in their hand, and you have that 1 in a million where a kid takes a practice swing with the bat, believing nobody's near them, and little do they know, little Billy just kind of walked up behind them, and they clock him right in the head, and something severe happens or something like that. That would be a case, or a golf club accident, something like that, maybe where something would happen. If maybe you have a horse on your property, and the horse kicks somebody and severely injured them, something like that would be a liability claim that would start with the home policy that could very well end up with the umbrella policy. But statistically, day in and day out, what we find the biggest exposure most every one of us would have as it pertains to an umbrella policy would definitely be driving your vehicle and being at fault in an auto accident. Who would be at fault, Billy's dad or Billy's coach? If it could be proven, that's Renee's question. If it could be proven, the coach, was very careless in the supervision of the kids and things like that, which would be probably pretty tough to prove in many cases. I guess, yeah, the coach could have some liability. I've never seen that happen, but at the same side, it would typically come from the family of the kid who swung the bat. And the sad thing is our society, right or wrong, is very much fixated on feeling bad for the injured party and getting them relief. And with that said, there's many cases that happen where an individual is not necessarily negligent in what happened, and therefore not technically liable for what happened. But if we look at it at State Farm, for example, and we deny the claim, and they go get an attorney and they come sue State Farm, and let's say that thing goes to court, goes to a jury, what you're going to tend to find these days in many, many cases is the jury collectively will feel bad for the injured party. Therefore, we need to help them with some money. And therefore, we end up paying the policy benefits out in cases where we don't necessarily think we're negligent and liable. And that's just part of the society we're in and how that works.
In just a moment, I'm going to pass around the microphone to the class, but before we do, once again, let's focus on this idea of the process, the risk management process. And in this slide, I said, obviously we know our client, the risk management goals, what are their risk exposures, what is their net worth, what is their income and future income, what form of business entity do they have if in fact there's a business. Then we look at the current underlying liability coverage, including those underlying policies, right? Do they have a current umbrella? And then we're trying to tailor that need, figure out the need, and once again trying to fund the premium, perhaps by integrated planning. Kurt, anything you would like to add to this slide as we think about that process of working with our planning clients?
Instead of one, and you're willing to maybe take 500 deductibles on your 2 or 3 cars instead of 250, or maybe 1,000 instead of 500, something like that. 2 cars, 3 cars, whatever the case might be. I see it all the time, where you can free up enough savings on the home policy and you can save enough on the car policies to pay for an umbrella. And that is just really, really smart leverage to take on a little bit more of the low end risk, so you don't major in the minor, as I might say, and make sure that you have the high end protection for the item that could sink your boat. That's really what we're after. And so we deal with that regularly. In helping people reconfigure their puzzle a little bit on the cost benefit to make sure they're absolutely getting the best buy for what the risks are, et cetera.
Okay, so now let's move to our class roundtable. Last week I went in alphabetical order, so let's go in reverse alphabetical order. Yaya, I'm going to give you the microphone. Again, you can either ask a question, share a learning takeaway, an aha moment, with Kurt. So with that, Yaya, let me give you the mic. And there you go.
Hello? Can you hear me?
Hello. Yes.
I guess my question was,
in the end,
you know how you said there's limits?
So if you take out the big Ferrari and it's 125,000, then you're going to be liable for the other 25. So if you have savings, if you don't have the umbrella and you got 250, 500, 100, then the end of the line is going to be the 100. and they're going to come after you for the 25 and work out, a payment schedule or something like that. If you have the umbrella, then once the 100 maxes, then the umbrella would kick in, even for that relatively little bit of difference to take care of, the rest of the damage.
And that umbrella is so worthwhile, like you said. Renee, let me give you the microphone, please. Thank you, Yaya.
My aha moment, I have my husband sitting here listening because we're going through the process of getting new auto and home and possibly now.
Okay, in the end, okay, so Renee and Renee's husband, I guess here's what I would speak to you. I bet you every level of protection that I have if something were to happen. And so I guess, yeah, I would just speak to the fact of, relatively speaking, it's not much more. Yes, it's real money, but it's not much more, relatively speaking, to have some of the higher limits and the higher protection levels to come with that. And you need are a third or half of the policy limits. Nobody ever squawks or complains or has any heartburn. Where we have the problem is when the limit's 50,000 and the damage is 80, or the limit's 100 and the damage is 160. That's when there's heartburn. And most of us will never need it, but it's usually just not worth it.
Renee, I want to add one thing to that. You said about new vehicles. And this is for you, it's for us, it's for maybe our clients. But when you buy a new vehicle and you're financing it through the car agency, if you sit down with those people, they'll give you an interest rate, and then they'll also try to sell you some type of insurance in case you total the car while there's still a loan in place, and the insurance will then pay off the remainder of the loan. One thing to check with, and Kurt, this is probably going to be a chance for a commercial, but also for whoever your insurance company is, check getting a loan through your insurance company, because they may throw in that insurance coverage in case you total the car for free. And I know when I sat down, I couldn't get my car through an inspection. I had an old car and I love this old Audi, but I couldn't get it through inspection out here in California because of the higher,
not necessarily the insurance company,
so
but in terms of the financing piece of it.
And I know that they wanted to charge me $1,500 for that insurance in case I totaled it. That's right, right, Kurt? That perhaps an insurance company will throw that in for free.
Our vehicle loans through State Farm Bank automatically provide as what's generically called gap insurance, which basically means if you owe $5,000 on the car and the total loss is $4,000, we will pick that up, and we include that for free on every vehicle loan through State Farm Bank. You're going to find anywhere from several hundred to maybe upwards of $1,500, like you said, but I've seen $700, $800, $900 all day long for the cost of that over a 4 or 5 year loan when you get it through Ford Motor Credit or Toyota Motor Credit or that type of thing. So make sure you just check out what your options are. But that's a nice little benefit that we provide automatically through State Farm Bank. So yeah, little plug right there.
Michael, go ahead. The microphone's yours, please.
Yes.
And make sure you engage your mic up on top, right?
I've been a member of State Farm. Can you hear me? I've been a member with State Farm for 15 plus years, and I couldn't even imagine having any other insurance. I think it's great. I'd like to also thank you for answering my earlier question. I just recently got into an accident, not my fault, and needed a rental car. They attempted to sell me additional liability insurance. I declined that. So I kind of thought that was a case State Farm would cover that. I think that's great. Now, I do have one question under the definition of insured persons. Now, if I got injured,
yes, your wife obviously. I mean, that's standard.
To drive the vehicle,
at least where I am, and I'm sure in every state.
Would
if
she got into an accident, would she be insured?
We have both of them rated on listed named drivers, whether they're actually a named insured or not. They by definition become a named insured. I mean, even if the policy is listed under your name, Michael, and your wife, Sally, is not actually listed in the name right there, because you're married, we're going to want her driving record information. Therefore, she would be covered by the policy, and that would be an automatic. Is that listed in Hey, Michael, and thank you for the kind words about our company. We're very proud of where we are, and we appreciate that very much. Thank you.
Go ahead, Megan. The mic's yours.
Okay, can you hear me?
Yes.
Okay. First, Kirk, I just want to say thanks for the presentation. It's been very informative going through this, and I actually have State Farm too, so this
I mean,
is
generally,
helpful on a lot of levels.
when you're hunting
I have a
around the
couple of
$500,000
questions. The first
mark,
question
they
is,
clearly make
when you're
sense.
looking at an umbrella
Because
policy,
one of the
what
issues
is the
is if
minimum net
you're an
worth
up and
that you would
comer,
want
even
to
if you
start
don't
looking at that
have
coverage?
a lot of equity in a home with the downturn right now, and maybe you don't have a lot of accumulated assets yet. If you're younger and you're in a higher profile job or you have a high earning capacity, one of the real things that we can deal with out here in California is if your limits aren't high enough to take care of the damage, and the other side of the fence sees you have income potential, they can go after a 10-year wage garnishment for you to help take care of that economic issue. So usually up in that area, but at the same time, one of the things that we face too is I have kids who are in sports. There isn't a week that goes by that I don't take a practice or bring a kid home to be convenient and helpful. If I have an at-fault accident, and Megan, I ran into you, and I've got my neighbor's kid in the backseat of my car, and I clock you and little Johnny in my backseat, gets really banged up. I'm at fault, obviously. Not only am I liable to you, Megan, and people in your car, I'm liable to my neighbor's child, Johnny, in my car that I'm bringing home from Little League practice. So if you carpool to school, to gymnastics, to scouts, to those kinds of activities that so many of us do, it can be so handy to have that higher level of coverage to take care of something that you might be liable for of that. But I would say, when you're getting up around $500,000, that's when it's kind of in my mind, kind of a no-brainer.
Okay. And then one more quick question. At the
With
beginning of
policy automatically, we've always provided that by our umbrella. We've always provided that by our home policy and our auto policy. That one goes back probably years and years and years and years. That one's kind of older than dirt. And yeah, you're right. Many people don't know about it because it's not really talked about much. And where I tend to get into that in a regular daily basis is really talking about the umbrellas, because when we think of an umbrella and what it does, it's going to help protect and pay when it really, really hits the fan. And when that's the case, then we got attorneys all over things going after things. And our counsel, we don't pay them $8 an hour, so that bill can get out of hand quickly. So that's the big sleeper benefit of that for sure.
Megan, thank you. Good questions. Lorenzo, the mic's yours.
Driver, they get their
Yeah, I just wanted to mention, I thought this chat session was really good. Just like most of the students in this class, thank you very much for that. That question Renee brought up about the DUI, I thought that was really interesting because, I mean, yeah, you're definitely doing something illegal, and you are assuming those consequences, but it does make sense, especially if you have the umbrella policy and you are able to utilize that for those needs. I mean, it's very unfortunate, and you are taking you're taking others in your own hand, their lives in your own hands. But I mean, that's something to stress on. My concern would be, of course, bad practice and just not getting people to think they could
Absolutely. Actually, one quick side note, Harry. One of my colleagues, I think that was with you a couple of times here recently, John Whited, another State Farm agent. He sent me an email from his local newspaper. Oh, this is maybe 9 months, a year ago, and he had a client. And the article in the paper was about his client. It turned out he had a client, though. I think the wife hit a kid in a crosswalk, and the kid died, and just very, very sad thing. And the family, the husband was a retired firefighter and had $106,000 a year pension, and had talked to John about dropping their umbrella. And it was, I don't know, 200, 215 bucks a year, something like that. And John talked to him about, the cost benefit and what have you. And the decision that he made was to keep it. And less than a year after that happened, this unfortunate occurrence happened. And through the umbrella within policy limits, I think we paid policy limits at State Farm. We got the full settlement and the full release without them going after any of his retirement or anything. And it was just kind of the irony that he had the umbrella, was very close to dropping the umbrella. John talked with him about some of the things. He decided to keep it. And who in their right mind would ever thought, within months, he'd be living it, of needing it. And, his assets and everything that would have been exposed if he would have not had the umbrella. And our legal defense was able to secure, like I said, a full release and clear him, of everything legally from that point. And I think that's the best 215 bucks a year that guy ever spent in his whole life. So that just a little story. If John was here talking about this, he would have shared it with you, obviously, as well. But those are the stories that we see sometimes. They're very, very sad, and but they're real, and they have an economic tie to them.
Yeah, so important to hear stories like that. Thank you for sharing. Jared, the microphone's yours, please.
I was thinking when you were speaking earlier about credit card rental car insurance. My wife and we went to Ireland last summer, and before we left, just on kind of I don't know why I did it. I called the credit card company because they always give us coverage. we rent cars, and they had a provision under that credit card where they denied coverage in only 2 places, and it just so happened Ireland was one of them. It was one of those situations where, by doing a little bit of research before we went, we were able to avoid a possible problem. What is your opinion on coverage for?
First of all, when you get the opportunity to get some level of protection from the credit card, I mean, you clearly did the right thing, and a lot of people will do that, a lot of people won't. But you called to be sure. We all know the joke about assuming, right? But you called to clarify, and who would have thought the 2 places of everywhere that they don't extend coverage to was where you happen to be headed. So good job doing the right thing to call just to be sure, not to have that epiphany. But other than that, when we get over into places like Europe and what have you, you're usually going to have to deal with the rental car companies over there, because a lot of the credit cards will give you coverage. Maybe England, maybe France, Germany, a lot of the more common places. I have not. I've been in Europe in several different places, not for 5-6 years at least, but I have rarely rented a car and driven there. I would always get the coverage there, because then it's going to conform to the local regulatory issues and things like that, just to be on point. And that's probably what I would do.
Thank you, Jared. James, let me give you the microphone, please. It's all yours.
Thank you, Kira, for taking the time to present to the class tonight. It was a really, really great presentation. With all the good things my classmates are saying, perhaps maybe I should switch over to State Farm. I'm not sure.
Yeah.
I guess my takeaway is really the vast extent. I haven't really looked into the umbrella to this extent, and I had no idea that it covered. Harry mentioned the Twitter slander, and then covering somebody that's in prison for DUI. But it makes sense the way you explained it. You covered a lot, so I guess one question that kind of just popped in my head is, what would you recommend to someone who might be leaving the country for, say, 3-5 months or longer?
Yeah, great question, James. When you're going to leave the country, especially if, when you leave the country, you're like your State Farm insurance, here in California or whatever state you're in, it's not going to transfer and cover you outside the areas that we talked about earlier, the territories, what have you. But if you're leaving for 4 months or 5 months or 6 months, you have a work assignment or something like that, you can call your agent and you can suspend every coverage, but you don't want to do comp. You want to protect the vehicle in your driveway or in your garage, from fire, theft, wind, vandalism, earthquake, hail, whatever it might be. But the car won't be driven, it won't be moving, so it shouldn't have any collision damage if it's just sitting there. So that we don't see it a lot, but from time to time, when you have some longer periods of time like that, that would be the way to do it. And yeah, you can save probably 60-75% of your premium for that window of time that you suspend it. But you got to make sure you calendar that the day you come back, you got to call us and reactivate it, because you don't want to get busy and be driving 3 days and have one of those moments. You know what I'm talking about.
James, thank you. And Carolyn, now I'll give you the microphone if you can wrap it up for us this evening. And the microphone's yours, please.
I really enjoyed all the questions and examples that were given in the chat tonight. I thought they were very good.
We're of course a big fan of that. We would rather have all your business. I mean, for me personally, it's a whole lot easier for me to work with you and help you manage your major risks and things like that. Coordinate coverages, discounts, billing, all that kind of thing when you have it with one agent. That is fairly common these days. We've got some pretty sizable discounts on the car if we have the home, and on the home if we have the car. And then if we have the home and the umbrella, you get an even larger discount on the car than if you don't have the umbrella. And so I'll get questions from time to time if, somebody may have another some coverage with us, some coverage with another carrier, and they call and ask me my opinion of that. I mean, I give them my opinion, but, I can't speak for or represent, somebody else like that and how exactly they might handle a situation. You're going to have to run that into the corner with them. So, as a State Farm agent, it's much easier. We put you on rotation to have you come in and do a review every 2 to 3 years. A lot of people take us up on that. Some don't want to, some are too busy or what have you. But when we have all the insurance and we can click through the screens, I have a screen that faces my client, and I use my laptop and I navigate with my mouse so they can follow along a visual to what I'm talking about. And, we can speak to missing coverages. We can speak to how much more it would be to add this or up that. We can actually requote right on the spot. They can see it. And it's all inclusive, to be able to do it that way. So you drastically reduce the chances of having gaps and missing items. And I can look at coverage all day long on my screen for clients and say, oh gosh, if this happened, I bet he or she would like to have this or that. But I can't, maybe get them to come in to do a review to let them know what they don't have and give them the opportunity to add it. So we always want to give you a chance to educate you and give you a chance to say no thank you, because we all have boundaries. But we're, of course, we're a family insurer, and we made our name, offering more of a full line of coverages from what we've talked about tonight. Life insurance, we have mutual funds, we have our bank, we have long-term care. So we have the ability in what I do to really, get our arms around the major risks that so many people and families have that, my opinion, bar none, is I would do everything you can to put it all with one company, because I can't think of very many reasons why it would make sense not to. Sure. Yes, they are.
Yeah, unless the coverage is not there, right? Like some companies might drop coverage from a certain state because of the risk liability. But other than that, the discounts are huge, right? Yeah. Well, Kurt,
No,
on behalf
my
of the
pleasure.
entire
I'm glad
class,
to do it. I
just
enjoyed
wanted
it
to
very,
thank
very
you
much.
again
You
for
always kind of learn
wonderful
when you teach,
presentation.
and there's a lot of
As you can
value
see
in
from
that.
everyone,
And
wonderful content.
if you have any
and,
additional
we appreciate
questions,
you
after
hanging in here
this,
for so
you
long and
feel free
answering
if you'd
so
like
many
to,
questions.
email Harry. He can get them to me, and I'm happy to help you out in any other way that I can, if you like. So thanks for having me.
It was our pleasure. Everyone, so before I stop the chat, let me just say next week will be the group presentation.